Every year, presidents file personal financial reports. Joe Biden's final disclosure was 11 pages long. Donald Trump's latest filing spans 927 pages. Within that document is a specific data point. In his first year back, he made over $1 billion from cryptocurrency. It's a striking figure, particularly given his earlier stance. In 2021, Trump publicly criticized Bitcoin, calling it a scam and a disaster waiting to happen. To understand the shift, we have to look inside the ledger. We need to see how a sitting president generated a billion-dollar windfall from an industry he previously condemned. This data matters because it allows for a direct audit of the president's income streams. By looking at these 927 pages, we can see the specific mechanics of how his traditional holdings are being outpaced by a newer category of digital wealth. Trump's physical assets, like his Mar-a-Lago club and his Doral golf course, are still performing. In 2025, they brought in roughly $200 million. But while these properties were once his primary source of income, they have been overtaken by his digital portfolio. The first major pillar of new income is $635 million in royalties from a branded Trump meme coin. While the token's market price dropped sharply for investors, the president earned licensing royalties, securing $635 million even as the asset lost value. The second pillar involves a crypto firm called World Liberty Financial. According to the disclosure, this company generated another $500 million in income for the president last year. This firm has a specific internal structure. It was founded by the president's sons and the children of Steve Witkoff, his special envoy. The data reveals a change in his economic identity. His business empire is no longer defined primarily by physical real estate, but by the use of his political brand to sell digital tokens. As these private earnings grew, the White House was simultaneously moving to change federal policy regarding the cryptocurrency industry. Last July, the president signed the Genius Act. The stated purpose of the law is to establish the United States as the global leader in digital assets. He also changed the leadership at the SEC, appointing Paul Atkins as the new head of the financial regulator. Atkins moved the agency away from strict enforcement and toward a more crypto-friendly regulatory approach. This monetization strategy reaches beyond crypto. The filing shows millions in revenue from branded Bibles and watches, along with over $86 million in settlements from various media lawsuits. These policy shifts and private earnings now exist in a shared environment. Deregulation efforts at the federal level favor the very industry that is now generating the majority of the president's personal wealth. The White House maintains that there is no conflict of interest because the president's businesses are managed by his sons through a trust. There is a legal basis for this position. Currently, the President of the United States is not subject to federal conflict of interest laws. Historically, presidents have followed a different standard. To avoid the appearance of a conflict, Jimmy Carter placed his family peanut farm into a blind trust, ensuring he wouldn't profit from his policy decisions while in office. George W. Bush took a similar step, selling his interest in the Texas Rangers baseball team before he began his presidency. This chart shows how the current approach has affected his personal finances. By not divesting, his estimated net worth has grown from $2.3 billion in 2024 to $7.6 billion today. The legacy of this 927-page disclosure is a change in the precedent of the Presidential Blind Trust. Under current legal exemptions, the office has been used as a mechanism for personal wealth generation on a billion-dollar scale.
Please like, comment, and share this video if you liked it, and at last, please subscribe to my channel World Updates to get your daily briefed global news.